Well, good morning from Stockholm. First, I'm proud that we today delivered a result with a return on equity of 17.5% and a cost-to-income ratio of 0.35. But rightly, as you point out, net interest income is down. And the reason for that is that interest rates go down. And that means that our deposit margins are lower. And it also means that when we finance ourselves, we need to do a little bit more market financing because there are less deposits in the system.
Let's talk about what we're seeing in terms of the weakness in some of the customers, because even though there's been some reduction from the top tier of the interest rate, it is still a high for longer story we're seeing from central banks. Run us through the credit impairments and what sign of early distress you're seeing some in amongst the client base.
Well, first, when you look at credit losses, we actually do credit gains this quarter because the new rules are such what you do is you model depending on how you see the outlook. And when we look ahead for Sweden, Estonia, Latvia and Lithuania, we are optimistic. We expect growth to be between 2.5% and 3% next year. Remember, these are countries with all low public debt, very competitive firms, and a strong belief in low inflation. So that means looking ahead, I'm pretty optimistic when it comes to our countries. But still, a lot of Swedes and a lot of people in the Baltics feel under pressure now. But I think what will happen is that it will look better if we look ahead.
Yeah, I actually happen to have Swedish house guests at the moment, Jens, and they're telling me the same story, that actually it's been a really tough 2023. 2024 is really tough as well. Infrastructure activity, building activity, the housing market boom and bust as well. Is the Riksbank moving quickly enough and appreciating just how tough things are?
You can always discuss whether you should do 25 basis points that month or this month, but I think all over, the Riksbank has done a good job. Look on wage agreements, look at inflation expectations, and I think they've been a steady hand in a difficult time.
Can I disagree with you, sir? I think the Riksbank was unambiguously wrong in its inflation assessments over the last few years and failed ignominiously to appreciate long before COVID that there was a housing boom going on that needed some form of adjustment on rates to just take the heat out of it.
Well, I think it's a fair point in saying that what you've seen the last 2 years was a shock to the whole system, and not only in Sweden. That was all over the world. I think the sort of combined effects of Russia's brutal aggression in Ukraine and COVID meant that inflation shot up more than people expected. But I think the central banks have acted decisively after that. If you look before that, well, you can always discuss, but there is an inflation target, and that inflation target is 2%, and you calculate inflation without bringing in asset prices.
Yeah, but I also remember in an earlier time, Jens, the Riksbank's assessment on inflation, and they were way lower than the mark actually ended up. Anyway, another issue. Let's talk about asset management. How's that side of the business looking at the moment?
Well, you look on net commission income. Net commission income is up a few hundred million, and it's 5% quarter on quarter. So that's very good. And the reason for that is that we see more money coming in from car provisions, and we have more asset under management. And if you look in our different brands that we operate within in Sweden, Estonia, Latvia, and Lithuania, we both have Swedbank Försäkring, Swedbank Insurance, and we have Robur. And they are both very successful, and especially also in building a savings culture in Estonia, Latvia, and Lithuania.